Welcome, everybody. Welcome to the January installment of Cota Access. It's our forum to bring founders, executives, and thought leaders into an open discussion of key market dynamics and technology shifts. Casey Bullock, welcome to Cota Access.
Thank you, Ben. Happy to be here.
It's a great pleasure to have you here with us and with the broader Cota community. For those who are new to Cota Access, this discussion is designed to be a venue which offers key insights from practitioners like yourself. We call it Knowledge Capital, and we're excited to build it with you. So let's get started. Casey, as a way to get started, can you introduce yourself? How did you end up in payments? What's your background, and what are you passionate about?
Yeah, great. I started in payments roughly 24 years ago, actually as a sales rep at a company called CyberSource, now owned by Visa. Honestly, this was very early on in e-commerce, and the online payments industry was really just starting out at that point. I spent the next several years selling and managing teams who sold global payment solutions to some of the largest brands selling online at the time. We're talking about companies like Hewlett-Packard, Symantec, Apple, Google, PayPal, Microsoft. The list kind of goes on and on. Later in my career, I held senior leadership roles at JPMorgan Chase, WorldPay, a company called Rapid, and I helped them to build and grow some of the most successful companies in the payment space, certainly at the time leading up till now. And the culmination of that and that experience really brought me to Citcon, where I've recently taken on the role of CEO, tasked with driving the business growth through the next stage of growth of the business. I guess as far as what I'm passionate about, so you asked the question, we're a growth stage startup. We offer a unified payments platform, and that provides access to over 100 different digital wallets across the globe. So quite an extensive product offering. We work with thousands of mid-market and enterprise merchants, honestly, just creating customized payments experiences for omni-channel. That would be in-store, online, and mobile commerce. Brands like Harry Winston, Hermes, StockX, companies like Xsolla, Sephora, Gucci. We have a nice long list of marquee brands that leverage our capabilities. And then many others rely on us to securely and reliably process their payments every day. I've been working and collaborating with our staff since day one, and honestly, I couldn't be prouder to be here at this point.
So just as a way to put things in historical context, you mentioned you've been in payments for 24 years.
Mm-hmm.
What's changed?
A lot's changed, right? So you're talking, heavy reliance on credit card processing early on. The evolution of that into, global alternative payment types. So one-off payments like bank transfers and push and pull methods. Then we gravitated into this world of digital wallets and super apps, which is what we're here to talk about today. Really just an evolution. But the reality is a lot of the methods of payment that were available early on are still available today. We're just seeing a lot more of them. And we're seeing a lot more focus on the cultural aspect and the regionality of payments. So that is far more important at this point in time than it certainly was 24 years ago.
And Casey, why do you think things have changed? So if I go back 25 years ago, we used cash and check and credit cards, and that was most payments. But why has it changed?
Well, I think a lot of it changes based on technology, right? I mean, in the early stages, there weren't a whole lot of options. People were just getting familiar with the internet. Back when I started in payments, people were just then starting to sell online, and that has, progressed quite substantially. Eventually, everybody has at least one cell phone on them, so mobile commerce has literally taken over and drives a lot more of commerce in general. So methods of payment had to adopt and adapt. So generally speaking, they had to migrate with the way in which people want to pay and the way in which they engage with companies. So me, for example, I'll buy goods online. I'll buy goods on my mobile phone when I'm in transit. I will still buy goods in physical in-stores. So in an ideal world, I would be able to leverage a method of payment that supports a truly omni-channel experience. So oftentimes I end up using things like Apple Pay or PayPal because I know it's going to work literally anywhere that I want to, initiate a payment. So I think, that probably drives things more than anything else. The regional preference side of it is certainly critical. One major theme you'll see today is this notion of choice. So you want to offer at least a few different methods of payment that fully support the cultural aspect or the regionality side of it. So ideally, you would target roughly 80 to 90% of the available spend in any given market. And you need to be able to offer the methods of payment that will tackle that.
Yeah, and let's go back to this regional differences. I know you mean globally, the regional differences, as opposed to locally, not the U.S., California versus Georgia. You're talking about the global environment. Talk about for a few minutes what you see globally and how payment modalities are different.
Yeah, so I'll put some context around it, right? So let's start with the U.S. industry. So the U.S. payment industry continues to grow by double digits. That's no mystery. I think people can see that. Credit and debit cards are still critical. Certainly, they're critical to any payment strategy, but they're not the end all experience that people are looking for at this point. So now you're seeing digital wallets, and those are now the most utilized payment method with well over 30% share in the e-commerce payment sector for the U.S. By comparison, in Canada, you see about a 27% use case scenario. Online and offline are different, certainly different use cases, but at the end of the day, they're both still growing by double digits. I would say, just for context, again, credit and debit cards are still considered some of the most widely used forms of payment on earth. So they're not going anywhere, but mobile wallets will typically allow connectivity to multiple funding methods. So this could include things like credit and debit cards, bank accounts, and in some cases, cryptocurrencies. And they're still prevalent, throughout most parts of the world. So a lot of merchants, we work with, they offer cards and or debit cards, and in most markets in which they operate. One of the overriding themes I would say of this webinar is definitely going to be consumer choice. So when you consider the regionality side of it, merchants definitely want to make sure that their customers have at least 2 to 3 mainstream methods of payment available to them. And these should be methods of payment that they are comfortable with. Now, calling them mainstream is a little bit of a misnomer, right? Some of this is just pure cultural preference. So one thing that needs to be considered as part of the regional approach is, if you're leveraging cards, what else is there?
Let's actually talk about the cultural
Sure.
preferences for a moment. So what do you see when you go around the world? How are payments different in Southeast Asia or in, different parts of Europe?
Yeah, so I'll give you some stats, right? And there's one report in particular that I think has a tremendous amount of data and factual data. So this is the 2023 WorldPay Global Payments Report. I'd highly recommend people read it when they get an opportunity to do so. This report is independent research and produced every year. So when it comes to the regional preference side of it, I'll give you some general statistics, right? So digital wallet penetration rate in APAC is at least 69%. It's well above 80% in China. So things like Alipay, UnionPay, WeChat Pay, for example, these are the dominant forms of payment for that particular part of the world. And in Asia, 4 of the top 15 countries are dominated by digital wallet spend. So that far outstrips things like credit cards, debit cards, bank transfers, and some other methods of payment. If you jump to other parts of the world, like the EU, for example, digital wallets are 29% of all consumer spend in that particular part of the world. With this concept of buy now, pay later, which I'm sure most people are familiar with, there's a lot of vendors that do that. That is 10% of all the spend in Europe. So that by far is the highest penetration rate for buy now, pay later at this point. I mean, there's a few other markets here. So Latin America, it's a roughly 21% penetration rate for digital wallets, topping out at around 162 billion in consumer spend per year. So that's an absolutely massive opportunity. And then finally, I would say Middle East and Africa, digital wallets represent about 10% of all online spend. So from a geography perspective, I mean, this kind of drives the point of choice. At the end of the day, consumers want to pay the way they're used to paying. Now, granted, we haven't gotten into the definitions of digital wallets and super apps yet, but in that case, this is what is being used by and large in a lot of different parts of the world.
You didn't mention the stat, but if I'm following you right, we're way less than 1% of total payments in the US where people are using a digital wallet. But in parts of Asia, it's 70 and 80%.
No, actually, it's quite high in the U.S. So, you're north of 30%. So maybe I misstated the statistic, but, digital wallets are the dominant method of payment in the U.S. And they're certainly dominant in Canada as well. So you're seeing digital wallets as, quite frankly, the most dominant form of payment that exists at this point in time. And that's a global stat.
Yeah, let's actually talk about what digital wallets and super apps are now.
Okay. So there's a couple of fundamental differences, right? I mean, mobile wallets were technically designed for financial transactions, so they would allow a user to store, manage, and make payments using various payment methods. So you could leverage things like credit and debit cards within the wallet. You could leverage things like bank accounts, and you could actually pay with crypto. So it really just depends on what wallet we're talking about and where they actually target. So use cases would be online and offline purchases or paying bills. That's another primary example. And I would just give you some examples of digital wallets for context. So some that folks on this call would be familiar with: PayPal, Venmo, which is part of the same company. Apple Pay, Google Pay. I mentioned the Chinese wallets earlier, like UnionPay, WeChat Pay, and so on. You got Amazon Pay, you've got Cash App, you've got Mercado Pago. That would exist in Argentina, Brazil, and Colombia, and then you've got a few in Europe as well: N26, Revolut, And then the buy now, pay later services like Affirm, Klarna, Afterpay, and Zip. I mean, the list goes on and on. So digital wallets are very pervasive at this point. You're certainly seeing a lot of activity in Europe, North America, and Southeast Asia and LATAM. By other definition, I would look at the super app concept. So super apps are essentially digital wallets on steroids. So they provide a centralized mobile platform that can support several functions. So it would be wallet capability. It would be things like messaging, social networking. Some cases they support food delivery or transportation. You could also include things like loyalty programs. So, they're generally referred to as lifestyle applications. So at the end of the day, people live and breathe within these apps, particularly in places like China. They're going to leverage just about everything that they do within these individual apps, and payments is a critical component of that. I guess some examples I would say, and some of these, they're loosely defined as digital wallets and or super apps, but like WeChat Pay, certainly Alipay in China, Paytm in India, Kakao Pay in South Korea, Grab, which is very large in Southeast Asia, RappiPay in Colombia, Mexico, and Brazil, and even things like Line Pay in Japan. So these are some primary examples.
And is that where we're going in the US at some point?
I think we're there, right? So, I mean, if we're looking at 30%, digital wallet penetration already, a lot of these things are already available in North America. Now, granted, some of the examples I gave are regional specific, digital wallets or equivalent. But the fundamental difference is you can take things like an Alipay, a WeChat Pay, or a China Union Pay. Those are being leveraged by a lot of North American companies, and they're being leveraged here to avail themselves of travelers. So Chinese nationals that are used to these methods of payment that come into North American soil, they may do it physical in-store, they may do it online, but they expect and hope to be able to pay with a method of payment they're familiar with. Companies are activating these methods of payment like crazy. So if you want to target a Chinese consumer, and the spending power that goes with that, you need to be able to accept these digital wallets to avail yourselves of their spending power. That's very, very critical.
But are Americans going to use a super app in our lifetime?
I think you're going to see evolution, right? So I've been waiting for this for some time. So theoretically, things like PayPal could evolve into super apps. You've got a couple of other applications that people use. I think it really just depends on consumer choice. I would also say Americans are a little stubborn. Like we tend to use multiple apps for different things. So, we really haven't gotten to that point of universal consolidation into one or two apps. I would honestly expect that to happen over time. I think the more optionality and the more choice that is developed and presented to consumers on North American soil, particularly ones that you leverage mobile, I think they're going to end up winning a much larger dominant version of the market share. I mean, I just can't see it going any other way. You've already got many examples of that in Latin America and Southeast Asia.
Is there a big advantage for the consumer associated with these super apps?
I don't know if I would call it an advantage. It's more convenience, right? So if you have one app that you can use to do just about everything you do in your day-to-day life, for you, that's a convenience factor. If you're on the go, you're traveling, let's say you're on the tube heading to downtown London, if you can do everything through, one single app, it's your precious time. Like you're not taking twice as long to jump through apps. If you're looking to buy goods or services from companies that offer the methods of payment that you personally prefer to use, and now granted, let's say it's one of these super apps, now you're far more likely to convert into buy from that merchant. You don't want to have to use a method of payment that you're not used to and or one that you're not comfortable with, or quite frankly, maybe it's one you don't even have. Not everybody on earth is banked. Not everybody on earth has access to credit or debit cards. But most people, given the circumstances, can get access to a digital wallet or super app. You can link that to a bank account, for example, and pay with the cash that you physically have in your account.
Does it come with a privacy downside?
I mean, look, there's always a consideration around that. I mean, I think these companies do an effective job of privacy and security. I would definitely say security is one of the overriding factors when it comes to consumer choice around methods of payment, but it's not, the be all end all. Every other day we read about a breach in some way, shape, or form that doesn't seem to deter people from continuously, buying and trying new methods of payment. But yeah, it's absolutely going to be a consideration in the long haul.
Yeah.
But you also have multi-factor authentication, you have passwords, you have various ways in which to protect that data.
If you go into the markets and segments where you see the early adoption, you talked about the travelers, but where else do you see it?
Um, okay, well, I think we got to unpack it a bit, right? So let's say, statistically speaking, the overall market for non-card based alternative payments, it's growing by double digits. I mean, we're talking about an $18 trillion consumer spending opportunity at this point, but that's a ton of spending power. And again, just referring back to the global payments report I alluded to earlier, digital wallets, they do account for 49% of all global spend. We talked about some of the regional, preferences and some of the regional statistics. So I certainly won't repeat that there, but I will say that credit cards are now a distant second. You're looking at anywhere from 20 to 26% utilization, just depending on whether it's online or offline. But it's also important to note that, as I stated earlier, these wallets don't exclude cards. The nice thing about a digital wallet is, it's a warehouse for payment methods. So you can technically have multiple ways to fund and to pay for goods or services all within the app itself. But if you look at user stats, and again, this is from the payments report, the annual growth rate for digital wallets is roughly 15% for in-store and 12% for e-commerce. Normally, you'd expect that percentage to be reversed, but we're seeing a lot more activation at the point of sale. So, it's widely used. And honestly, just from a regionality perspective, these things dominate in certain parts of the world. I mentioned Paytm. It's very popular in India. Grab is very popular in many Southeast Asian nations, particularly the ones that are very e-commerce driven. You see PayPal in North America, you see it in Europe, Alipay and WeChat Pay and China Union Pay, certainly mainland China, but definitely, for a lot of the Western nations that target Chinese consumer spending power, a lot of them will accept these forms of payment to avail themselves of the Chinese, spend. So at the end of the day, the other thing you really have to consider, Ben, is total number of registered users. So oftentimes that ends up driving, the preference and the choices that are made both at the consumer level and the merchant level. For example, we mentioned trillions of dollars in spend, but Alipay is well north of 800 million registered users. PayPal is well north of 400 million. Cash App has tens of millions of registered users. I mean, these are absolute juggernauts for digital wallets.
You talked about two brands in particular that target a relatively narrow demographic, right? Sephora and Xsolla.
Mhm.
So what's the use case there that really seems to be working?
Sure. Yeah, no, Sephora is truly omni-channel, right? So Sephora has physical in-store and they have online. They've been very astute, I would say, in their payment preferences, looking to both the cultural aspect of it as the geography aspect of it. If you're predominantly targeting a North American consumer base, you have to consider all the people that are living and or traveling through North America. So, certainly Chinese wallets, buy now, pay later, other forms of US domestic alternative payment types. These are all key options for a business entity like Sephora, and they want to make it easy for you to capture online and offline. So if you can leverage many of the same methods of payment to do both, you're going to be far better off. Xsolla is a different animal, right? Xsolla is technically offering their capabilities to a lot of different gaming companies, and I mean digital gaming, not like gambling. But at the end of the day, they're targeting everything from one-off video games, subscription-based payments, virtual environment, buying and selling of digital goods, and they offer an absolute multitude of alternatives. So they have a truly global audience. So at the end of the day, they need to offer methods of payment and certainly do that cater to those audiences in different parts of the world. So that's another great example of a very sophisticated merchant with a very robust offering as far as not just digital wallets, but I would say alternative payments in general.
It's a good way to start to focus the conversation around merchants. How do merchants think about consumer choice when evaluating payment options?
So, I mean, there's a few different ways to look at this, right? So, consumers obviously have choice, and at the end of the day, I've said it a few times in the call. They're heavily reliant on companies to offer what it is that they want to pay with. So, most consumers have a favorite way to pay. I mentioned for me, it's typically Apple Pay or PayPal. Those are the things I tend to gravitate to when I'm making my purchases. And consumers will seek these things out, wherever possible in the shopping experience. So, if a company offers a range of payment options, this should include the understanding that choice drives purchasing behavior. If you don't offer cultural specific or regionally preferred methods of payment, you are more than likely either going to lose that customer or you may potentially lose the recurring spend that customer would bring to the table. I would give you two or three other examples of things to consider. One is security. So we alluded to this a little earlier. Consumers want to feel secure in their shopping experience. At the end of the day, they want to feel like, particularly with the digital wallets, that the information stored within there is secure, that it's not going to be breached, that it's not going to end up in the dark web somewhere. And honestly, there's a belief at this point, some may agree, some may disagree, but the digital wallets are more secure than simply entering a credit card into a payment form. Nobody's looking at it, nobody's peering over your shoulder, you don't have less of an issue of fat fingering the info into the payment app. Whether that's ultimately true or not, consumers believe that the shopping experience and personal data are protected, and that's definitely going to be a key to repeat business. I would say the final two things, Ben, real quick, I would say cost and conversion rate. So these are more merchant specific. So when we talk about choice, I want to look at both sides of that equation. You got to look at consumers as well as the merchant preference. So cost is always a consideration, right? So, but merchants tend to factor this into their COGS. That calculation ultimately is fed into the price of the good or the services that are sold. So it's reasonably transparent to the buyer. But alternative payment types on average tend to be cheaper than cards. It's not always the case, so I want to caveat that, but in many cases it is. So merchants get the option of offering a method of payment that's preferred by that consumer. They actually spend less money on the merchant fees, associated with that payment transaction. It's a win-win scenario on both sides of the equation for them. And then I would say final consideration is certainly conversion rate. I mean, most of the clients that I speak to and my company is engaged with, they ask about, top line conversion, revenue conversion rate. How do I convert, X% additional payments as part of my workflow? Well, oftentimes a lot of that comes down to offering more than one method of payment. If you offer a credit card and that card is declined, you then offer the choice of one or two other methods of payment to that consumer. It's a much more highly likelihood that they're going to be able to convert that transaction, and it's going to convert to revenue for you as a merchant. So you need to be able to balance those worlds. Some of that is just pure analytics. Some of it is quite literally just understanding the methods of payment that are predominant for the parts of the world in which you're engaging your customer base. But all these ultimately have to be considered as part of that general process.
And when you talk about conversion rates, is there like an optimal number of payment methods to accept, or does it vary by use case? What have you seen your merchants come to you with?
Look, it's the simple answer is it's going to vary by method of payment. So trying to pinpoint a target is really difficult. When it comes to cards, it's a little easier. There's a lot more statistical data, that will illustrate that, your average authorization rate in the UK should be well north of 95%. But in the case of, super apps and certainly digital wallets, just keep in mind you've got multiple funding sources behind that. And your average user for these things is typically a millennial or a Gen Z. So you might have a younger generation of person that's using it. They may have less access to credit. They might have a little, fewer dollars in their bank account. So oftentimes when you get a lower conversion rate, it tends to be because they quite simply just don't have the funds to pay for it.
But should the merchant offer an infinite number of payments?
Definitely not. I would say if you're in gambling, you're going to offer an infinite number of payments, but your average merchant, no. I mean, it's pretty common to offer 1 to 2 dozen methods of payment when you're targeting a global audience.
Wow.
Oftentimes they're bucketed together. So cards and debit cards, certainly, but you're not going to throw 6 or 7, maybe even 8 buy now, pay later, vendors out there as choice. I mean, at some point you're going to overwhelm the consumer with choice. You're better off just understanding some of the nuances, like what are the payment terms? What are the max and min transaction values? Chinese wallets, for example, China Union Pay, you could spend north of $10 million on a single transaction. So you might walk into Harry Winston and want to make a purchase for $1 million set of earrings, and you'll use China Union Pay for that. You then might walk over to Louis Vuitton and you might buy a $5,000 bag. You might use WeChat or Alipay for that, who tend to have a lower transaction ceiling. You just really need to understand some of the nuances of the methods of payment and marry those with what you're selling, as well as the consumer base you're targeting.
So if you go back 25 years when you first got started in payments, and the typical merchant accepted Visa, MasterCard, American Express, Discover, and maybe a store card and cash, that wasn't a lot to manage. And now all of a sudden we're moving to a world where there might be 24 different payment methods.
Mm-hmm.
How do they do that? How does a merchant keep on top of all the different things, and what kind of technology stack implications are there?
Yeah, I mean, so it's a multifold question, right? So from a technology perspective, there's a lot available to them. They can integrate directly to the various companies that offer these methods of payment. They can work through, payment solution providers like a Citcon. So you can aggregate to one platform and get access to hundreds of these things on the back end. Oftentimes, from a technology perspective, they may be leveraging an e-commerce platform. They may be leveraging a platform like Shopify, for example, or they may leverage a Microsoft platform or something equivalent. And oftentimes, these platforms will have back channel integrations to these providers and or PSPs like a Citcon. So, I think the technology side of it isn't as challenging as it once was just because of the availability of front-end integrations. But maintaining these connections is one of the more overriding factors. It's not uncommon for a lot of these alternative payment providers to upgrade and offer new capabilities every year, which then force an upgrade process on the merchant and or the PSP to make sure that they have the latest capabilities. That's very difficult to manage. So oftentimes a lot of the companies that we speak to, they struggle with it. They might have gone direct to these providers. They know that they're getting good value from working with whoever, PayPal, buy now, pay later, et cetera, but they just can't simply keep up with the upkeep. So, oftentimes they're then going to the single API structure of a PSP. They know that those upgrades are happening on the back end, and that's all being maintained for them. And generally speaking, in those cases, you're not necessarily paying more money for the privilege of doing that. It's a simplified way to kind of manage the overall process. I don't want to overly trivialize this. It doesn't just automatically make it simple. But even back to your original point on which methods of payment to accept, usually these things are in buckets, right? So you're going to have, digital wallets, you're going to have cards or debit cards, you're going to have the concepts of things like, bank transfers or equivalent, push and pull methods of payment. So my advice is always the same. Let's look at your ideal customer profile. Let's look at what sales channels you're selling through. Let's understand the geographies in which you're targeting, and whoever you're working with, whether it's a PSP or directly with these providers, they should have some data to share with you to say, look, based on all the inputs you gave me, this is what I recommend you use. You don't need to go out there with 8 different, buy now, pay later solutions when 2 or 3 are really going to capture the audience that you're looking for. It just really comes down to the analytics. And honestly, I think that's where some of the larger scale PSPs, the companies that offer these capabilities, they have a lot of that data and they're in a position to share that with the merchant directly.
Interesting. So for our audience that's not deep in payments, if they wanted to see how this works at the point of sale, because I would bet most people have never tried to even use PayPal or Venmo at the point of sale, where could they go to see this in action?
There's a ton of companies that do it, right? I mean, you got to think about a lot of the folks that are and who they're targeting. So I mentioned the Sephora example earlier. Hermes does it, and they do it quite well. So they have physical in-store. Again, I'm always cautious. Like it's public knowledge. If you walk into Hermes and you say, "Hey, can I pay with this method of payment?" They're of course going to tell you. In that case, Chinese wallets, for example, so they certainly want to avail themselves of the Chinese spending power. Companies like Safeway do this at point of sale. Honestly, you may not know it, but if you walk into a Safeway or an Albertsons, you can pay with PayPal. So you don't have to use a card. You don't have to use a debit card. You can usually go up and you can literally initiate payment right there at the point of sale with your PayPal account and walk out the door with your goods. You can do the same thing at Panda Express. Panda Express has a few thousand stores. Every single one of them accepts PayPal at the point of sale. Again, probably not widely known, but in those particular cases, you could very easily go and pay with a digital wallet. And there's a long list of other companies. I mean, certainly high-end retail, these guys have, I think, done a really, really good job of offering, methods of payment that their consumer base expects to pay with. But you see that cascade all the way down. But, in-store retail, it's still the bulk of the, the consumer spend that happens out there. So if you're a method of payment that doesn't support Omni, you're automatically at a disadvantage.
All right. So just in closing, first of all, thank you for sharing your insights on the market here. Where do you think we're going to be 10 years from now? What's your view on how the world's evolving in payments? Are we going to see convergence across geography and across use case? Are we going to see divergence? What's the landscape going to look like?
Yeah, look, I mean, this is a tough one to answer. I would say you're going to see a lot more biometric use cases. I mean, for those people that shop at like Whole Foods, for example, and you see the palm scanner that they've introduced, that's being introduced in other locations. You're seeing more, eye-driven biometrics. You're seeing fingerprinting. I think that in direct association with things like AI, they're going to create an actual purchasing experience that's far more simplistic than it is today. Now that comes with pros and cons, right? So like the easier you make for people to actually spend the money they have, of course, they're going to spend, but you also run into security challenges. So we touched on that earlier. Biometrics and certainly AI, they have their own unique challenges. None of this stuff is foolproof, but at the end of the day, this is personally where I do see things going. That's not going to dominate every part of the world, clearly. So you still have emerging markets. You still have parts of the world that are still evolving payment strategies that may be years behind other parts of the world. So digital wallets are certainly going to be here to stay. Even cash, Ben, you mentioned cash earlier. Cash used to be a dominant form of payment in Southeast Asia and Latin America. That is dwindling, and that's dwindling in favor of things like digital wallets. So I think digital wallets are here to stay. I think the next 10 years, you're certainly going to see those continue to be the dominant form of payment, regardless of the funding source behind it. And for those companies that have a sufficient strategy that accepts a number of digital wallets or super apps, they're well positioned to have a successful future.
Great. Thank you very much. We're going to flash disclosures to end the conversation. It's a legal requirement, but we very much appreciate your time, Casey, and everybody who's participated. That's the end of our event today.
Thank you, everybody. Appreciate your time.